The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 8th fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. But to start today, I've got a question for you. The question is this: what's the most valuable thing that you and I could do in a world that is changing so rapidly? Something that could give you a competitive edge in your trading and investing. Would you like a competitive edge? Well, I hope the answer is yes, because step one is always to get a sense of where it is that you are in your trading. See things the way that they are, not worse than they are, not better than they are, just simply where you are when it comes to your trading and investing. You see, what we want to do is we want to build upon that. Doesn't matter where you're at. We just simply want to build upon the successes that you've already created. When you know where you're at, you can pick out the next target, the next level that you want to be able to achieve. Another question: what is the one advantage that could benefit you the most in this fast-changing world? The one advantage. You know, the easiest way for me to be able to identify it, and for you as well, is to be able to take you to a place where perhaps once you felt disadvantaged. Question: how many of you have ever had this experience of total and complete humiliation of playing a video game against a child? If you've had this experience, raise your hand or say aye out there. I can hear you. It's humiliating, yes or no? Yes. Who always wins? That's right, the child. Now, why does the child always win? Do they win because they're stronger, they're smarter, they're faster, they're more brilliant? No. Well, sometimes they are, but that's not the reason that they win. Here's how it usually happens. You've got a son, a daughter, a niece, a nephew, a friend's child, and they say, "Hey, Uncle Steve, come play this game with me." It seems like such an innocent request, right? But you don't want to play because you know you're not as good at this game as the child. Yet they look at you and, you know, with those heart-melting eyes, and they say, "But don't you want to play with me? It's so easy. You just shoot the bad guy." And, of course, finally you just give in and you say, "Okay, let's go ahead and play." And have any of you had that experience out there? Well, of course, you know something is up when the child says, "Hey, by the way, you go first." So you start playing, you start shooting, and, of course, you end up dead in about 3 seconds. And then the child picks up the controller, starts shooting, and maybe 45 minutes later, you get your second turn. Of course, at this stage, you're all experienced. You pick up the controller, you start shooting, bang, 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 and next thing you know, 6 seconds later, you're dead again. So why is it that the child always wins? Is it because they're smarter, they're faster? Is it because they have more practice? No. It's because they've played this game before. Because they've played this game before, they know these secret words. You want to write down these secret words, folks. The secret words are, they know the road ahead. by knowing the road ahead. They don't have to react. They can anticipate. Anticipation, folks, is the ultimate power in business, in any business. Anticipation is the ultimate power in trading and investing. We spent a lot of time yesterday taking a look at patterns. We're going to do that today as well. If you are going to be successful, you've got to attain the highest level possible. It means that you can't react. And that's what really anticipation is all about. If you don't know the road ahead, you'll do the right thing, perhaps at the wrong time, and then you'll be dead in about 3 seconds. If you're going to succeed, we've got to know the road ahead. If we know the road ahead, we get rid of reaction, and we get rid of stress, and we become more effective. Would you like to be more effective in trading, folks? It is all about pattern recognition. That's what we're going to take a look at today. It doesn't matter whether it's AB equals CD or Fibonacci expansion or contraction or using the RSI or testing swing points or coming back to breakouts or breakdowns or, reading the message of the markets, folks. That's what I've spent really thousands of hours doing. Why? Because actually I love it. I love unlocking the key to success. I've made a career out of it, and then I do what I love even more. It is compressing decades into days and thousands of hours into 1 hour out there. Folks, it's all about pattern recognition out here. So that's what we're going to take a look at. When we take a look at these markets right now, really relatively flat out here. You've got the Dow futures up about 10 points, the S&P up 2.5. In fact, if you're watching us on Tiger TV, the chart that we've got up on the screen is the ES Mini. It happens to be the 10-minute chart out there. And there's a reason why I've got the 10-minute chart out there. But we'll come back to that in a moment. And if you are listening in on the radio or maybe your mobile device, remember you can always catch the archive of this show on Channel 9 out there. NASDAQ futures, they're up about 10 points right now, mostly because of Apple. Russell 2000 up just slightly. King dollar back just about a penny, 2 pennies out here. A lot of changes in the currency market. If you take a look at the Japanese yen, that is finally U.S. dollar Japanese yen currency pair finally starting to pull back. We'll certainly take a look at that. Gold futures relatively flat, trading out at $16.69. That's down $1.80. Silver up 6 pennies out at $31.46. Light sweet crude up 45 ticks out at 96.28. Around the globe, you've got the DAX up 25 points, just hitting the pause button again here this morning as it continues its move down. The FTSE up 32 points. That's up about 0.5%. The Nikkei pulling back last night, almost 2%. The Nikkei on its way to start its retracement. Nikkei closing down 203. The Hang Seng up 38. And the Shanghai up 14. Our call-in number, as always, is 877-927-6648. So, when we were on the market, when we were on the show yesterday, I can't recall. I think it was the 9 and the 10 o'clock show. What we were taking a look at, the ES Mini moving down. Now, one of the things that I had pointed out, if I switch over to I'm going to switch back and forth here between the 30-minute chart and the 10-minute chart. They both really show the same thing, but we're going to show it on a little quicker time frame for you. One of the things that I said as the market was moving down is be careful of that 1491.25 area. Why? Because we know that is a defended bullish position. There's no question that is a strong, defensible position of the bulls. We know that they are hanging out down there. Why? Because we know that there's a hammer candle. We know that area has been tested several times. We know that the market was moving down into an oversold condition. That's using that relative strength indicator. It's really all about being able to read the message of the markets. That's what that free report is that's available for you on the homepage of tfnn.com, reading the message of the markets. Put a lot of hours, a lot of education into that. It's got 3 videos. There's going to be 4 additional videos that'll come out so that I can teach you. There's also going to be a 1-hour workshop on February the 20th that you'll be able to attend, where I'll teach you how to identify really key divergence that works on all time frames, all different charts out there. And it's something that if you want to really be able to become effective in your trading, if you want to be able to know the road ahead, just like when you play a video game, then you want to understand these patterns that are out there, and you want to understand the bullish and bearish candle signals that give you the highest probability for success. So I'm going to switch back. Now, you did see the market move down into the noon time frame, and then the bulls showed up. Bulls and bears will always show up, and they'll always let you know when, and all you've got to do is be paying attention to the candle signals out there. You had a bull sash on the 30-minute chart taking into the 12:30 time frame. Let's go back here and take a look at the ES Mini. Let's take a look at the 10-minute chart out here, and on the 10-minute chart, you can see cascading down, all the way down, coming into the 10:50 session. No bulls in sight. The first bulls showed up right here at 11 o'clock in the morning, gave you that little bullish engulfing candle. That could have been a trigger to have gone long. Market goes ahead and pulls back and tests out the bullish engulfing candle. That happens to be the low of 11 o'clock. That identified an area of support. Plus, we know that underneath that, I think it's at the 1491.25 level, we know that also was a strong area of support. So it became pretty easy if you were going to go ahead and take a reversal trade, because you can see that as the market moves down into an oversold condition, what is it going to do? It's either going to bounce it's going to move sideways or bounce higher. And if it's going to bounce higher, where's it going to bounce to? That's right, because if you know the road ahead, what you're going to use is Fibonacci retracement numbers between swing points. You're going to use 382, 618, 786 out there. 618 is really the most ideal, but you've got to be aware of the others as well. What happens? The market moves down a little bit lower into the 1150 time frame, and that's what I'm really going to where I'm going to really be able to teach you in the workshop on February 20th is what is all involved there that gives you an incredible set of reversal signals. Not just that, but the bullish engulfing that took place there at 12 noon. You had one bar confirmation yesterday I shared with you, perhaps one of the greatest other secrets out there, which is wait one bar, one ping, Vasily, I believe it is, just one ping. What that means is just one bar. Make sure the market is, in fact, moving in your direction on the trade out there. And where did the market bounce to? Coming in to the time frame of 2:10 in the afternoon, right to the 0.618 retracement. Would that have been a good enough trade out there? If you were trading intraday, if you're trading, TNA, TZA, SDS, SSO, SPXS, all of those ETFs, all of those wonderful triples and doubles or singles out there, whatever it is that you want to trade, and you're going to trade intraday, you certainly want to be making those decisions. I would want to be making those decisions based on the reversal signals that you are seeing in the futures contracts. You don't have to. If you don't have access to the futures contract, why don't you go over to the homepage at TFNN.com. Over on the right-hand side, you'll see the Nadex banner out there. Click on the Nadex banner. You can have access to their charting application, their feed out there. You're giving them a $100 deposit. And you can also learn how to trade Nadex, which is what we're going to do in the next hour as we come on. But you want to be able to put all this together. This is really all about knowing the road ahead. Look, you and I, we cannot control what's going to happen on the right side of the chart. But what we can do is we can identify what the normal road ahead does and says. And all you have to do is wait for candle signals out there, wait for retracements. Retracements on this was pretty simple. It's the resistance area of the high of 1511. That was your swing point. That actually came in. That was tested at 6:10 in the morning on February the 7th out there, all the way down to the low put in at 1150 yesterday. Sweet 618, Sweet Home, Alabama. That was at 1504.75 out there, and that is exactly what was hit at 2:10 in the afternoon. Right now, looks like the futures, they want to go up and test that 1511 mark one more time. One ping, Vasily. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Not anything really unchanged here in the futures market. Relatively flat. So, I want to go back. Yesterday I had a call from Mike in Lakeland. He was taking a look at trying to better understand expansions of swing points, contractions. And so what I'm going to do is I have the, if you're watching us on Tiger TV, the chart that I've got on my screen, it's a daily chart of the SPYs out here. So we're going to just simply, because everybody pretty much has access to at least the SPYs. We won't take a look at the futures contract. We won't take a look at the S&P cash index. And what I've done here is I've kind of pushed the chart so that what we're looking at here is we're just the candle that's over on the right-hand side is November 16th. And so we're going to just simply start there. And we're good, and then we can simply go further off to the right. Now, one of the things, as the market came off of the lows from June 4th all the way up to the high that was put in on September 14th, if you just simply take, on your charting package, you most likely have some type of Fibonacci ruler. If you go from the low all the way up to the high, one of the things that you'll see is the number 135.15 measures the exact 0.618 retracement. Now, on November the 15th, you actually had the SPYs get down to a price point of 135.18. 135.18 versus 135.15. That was already suggesting to you, if you want to know the road ahead, in fact, if you take a look at the 0.382 level, you can see the way that the candle right through that, a wide-ranging bar. That was telling you that 0.382 was likely not going to stop price on the way down. Of course, as price was moving down on the actual day of the 15th, you started to get that little small-bodied candle. And the body of the candle, folks, it is absolutely the essence of price. The extremes, the psychology extremes of any candle are the top and the bottom of the wick. But you want to really, and not that they aren't important, but you certainly want to be paying to what I'll call the essence of price, the body of the candle. That very next candle on November's, so you know you're right near an area where you may find a reversal, where there may be a reversal. And in fact, that actually set up a Gartley buy pattern out here on the 15th, on the 16th. I always say wait one more candle. So if we take a look at the pattern, I'll just simply draw it in here, coming down from the lows up to September 14th and right down here. And that is a 0.618 Gartley buy pattern. Just as simple. But because I taught you wait one candle and wait for a bullish sign, what you would need to know about the candle on the 16th is that's what's referred to as a key reversal day. It's also a bull sash candle, or a bull, looks like maybe a bull separating line candle, but more importantly, it has a combination of two impacts on it. And what you've got is a key reversal. This is where the market is moving down, gets into, in fact, I'll go ahead and put in the relative strength indicator as well. You can see as the market was moving down into that day, it was what? It was oversold, just like as we were looking at the 10-minute chart on the ES Mini. So it's oversold. You get a key reversal day. Key reversal day says the top and the bottom of the preceding candle was hit intraday, exceeded intraday. That most certainly happened. It happens at a extended condition. Well, you can call this an extended condition because the market is in oversold territory, and then the market closes in the opposite direction of where price came to. And folks, I can tell you, I happened to be doing Tom's show on this day, and I was saying, okay, we got reversal signals, just like the other day when I was on here and said, okay, we got reversal bearish signals out here. Now, just because you get a signal doesn't mean the market is going to participate with you. But what you want to do, it's like playing that video game. If you were a child playing that video game, you knew the market ahead. What you would do is at this stage is here is when you would pull the trigger to go get the bad guy if that was the game you were playing, or in this case here, in order to be able to identify a reversal. Now, the only thing you can control is your risk out here. Your risk is your stop and using 1% of your trading capital. That's another trading session, or that's another session out here. So now that you have swing points here, you also know to the upside where it is you're going to see perhaps the sweet 618 level. So you'd come from the September 14th. I'm moving the chart further left. September 14th down to the November 16th low. You had that nice gap up. That certainly tells you on the 18th or 19th of November that you're trading in the right direction out here. And you can see the market had moved up into the 0.618 level, which was into December 19th. That number would have been 145.25. That actually set up a Gartley sell pattern. If we take a look at that, I'll go ahead and pull this in on the chart so you can see what that actually looks like. There's your Gartley sell pattern. It's a 0.786 retracement out here. Actually, my apologies. Let me come back here. It hits that 0.618 level right here on December the 3rd out there. Hits it, gives you also a bearish reversal signal. Moves back down and then moves back up into the 0.786 level. You've heard us say, if the 618 level fails, what's going to happen? It goes up to the 0.786. If a 0.786 Gartley fails, it turns into a butterfly more times than not. That is what exactly has happened here, as the spies have made this 1.272 butterfly. And all you're looking for is expansions of swing points. It's the same swing points you used for the Gartley pattern as you do for the butterfly. That was September 14th's high. That was the low of November 16th. You'll see 1.272. The exact number, 151.76. So far, the high out there has been 151.48. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of tfnn.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of tfnn.com.
And we're off to the races. We got the Dow up 21 points right now, Composite up 12. S&P up 3, small caps up 1, Google up $6, Apple up $2.80, Microsoft up 12 ticks, Intel up 9 pennies, Cisco up 10. Lead the charge to the upside. LinkedIn Corp out with numbers last night. LNKD is the ticker symbol. They're up a nice $20 right now. That's up 16%. What did they announce here? Let's see. What was their revenue? They did a total of the net income was $40 million versus $13.3. Not too bad. That was non-GAAP. GAAP income $11 million versus $6.9. Revenues of $303 million versus $167. Nice growth story going on there for sure. FleetCor FLT. They are up 8% this morning. That's up $5 and change. Earnings per share out here. Let's see. The net income 60 versus 37 million, 202 million in revenues versus 140. Also having a nice move out there. You've got Lear Corp, LEA. They are up $3.45. That's up 6% here. Lear Corp, let's see, what do they have? They've got a 1 billion share repurchase program. Okay, so that is what is looks like is moving that. One of the things that is moving that stock chart as well. Apple up $3.45. We're going to take a look at that chart in a moment. To the downside here, you've got Nuance Communications, NUAN, getting hammered this morning, down 16%, off $4 here. Let's see what the results of they did revenues of $462 million versus $360, and that loss of $22 million versus a profit of $9 million. So they got some problem going on there, and taking it in the shorts this morning. Coinstar, CSTR, off 6%. That's off $3 and change. Coinstar out here. Let's see, what do they have as an announcement revenue-wise? Looks like, what is it? Coinstar expects consolidated revenue. Where is the number here? They did revenue $564 million versus $520. Not too bad there. The net income for the year, $2.2 billion versus $1.8 billion. Net income for Q4, $22 million versus $31. So they've got a little cost issue. Riverbed Technologies, RVBD, down 14% this morning. They're off $3. Laboratory Corp, LH, off 2% too. Off having a correction out here. Guidance Software, GUID. They're down 20% this morning. It's off $2.45. They did revenues of $129 million versus $104 from a year ago. Net loss of $2 million versus a loss of $1.65 million. Anyways, they are taken in the shorts. Let's go take a look at Apple out here. Why Apple? Because it could be all about Apple. If we take a look at Apple yesterday, closing into the gap, just barely closing into it, but still closing into it. What it does is it really takes out that first level of resistance. The first level of resistance in Apple on the daily chart was the downdraft from January 24th. That high is 465.73, trading out at 470.67 out there. The volume was 52 million. It got over it with 25 million yesterday. If it gets back inside, it was one of those false breaks. But right now, it's taken out that first level of resistance. Whereas the second level of resistance, we'll come up with three levels. The real second level of resistance happens to be the candle that it gapped down from. That is January 23rd, and that low is 504.77. May run into resistance just simply that had volume there when it gapped down. That was 30 million shares. You've got 31 million shares slightly underneath it back on January 15th, and that was at a price point of 483.38. So 483.38 all the way up to the low of 504.77 is really what's game as long as Apple stays above the gap down of January 24th. That, again, being 465.73. So that'll be really key overall, I think, to the markets here today is watching how Apple trades. Let's go take a look at some of these stocks that are popping and dropping. Let's go start off with Coinstar out here. So you've got Coinstar. They are down about $3 right now. That's off about 6%, off of its session lows, though. So Coinstar here, let's go see what it is doing. Coinstar had set up a nice butterfly pattern. It wasn't the full 1.272 expansion area all the way back up at its highs on July 5th. Of 2012. Of course, what you can see up here, and I'll go ahead and erase this. If you're watching, I'm going to go ahead and blow it up just a tad. What you can see here is if you let me just erase this now. We're going to erase the butterfly pattern and the retracement level. What you can see is it had that expansion potential at 1.272. You had a nice set of bearish reversal signals here in this equity on July 9th out there. You can see the market here in Coinstar had also gotten to where it had also gotten to the overbought condition out there. Of course, as this moves down into oversold territory, you really didn't have any bulls show up in this equity, not until about right here. But this is a great little equity here. I'll go ahead and even add this one to the workshop that I'm going to do on February 20th. That's from 6:30 to 7:30. Download my newsletter. All the details are in that with regard to your ability to sign up for that workshop. And folks, question is if you believe that 1 hour can change your life. because I believe 1 hour can change your life, and that's what I'm going to do from 6:30 to 7:30. Coinstar gave a nice little signal down here right at this stage, right back in October 26, 2012, even as it was making a lower low out there. That was an actual buy signal in this equity. This morning here, gapping down, coming into the most recent swing point low, but really what you can do is on Coinstar, you can take a look at the level here where you got that bullish reversal signal, which was October 26th, the high out there, 47.24. I'll draw the line across there. You can see that is really where it opened this morning. It opened down at the 47.40 versus 47.24. 7.4 million shares. I have to see what volume here does today. Already down with 936,000 shares, but this is taking on its first level of support. It's not really this candle of its last swing point, which is January 14th. You go a little bit further to the right, and you can see the volume bar out there, and that is really where we'll find out whether or not the bulls are still inside Coinstar out here. Let's go take a look at what else is popping and dropping. We've done Apple. Let's take a look at LinkedIn. LinkedIn here today, gapping up nicely with some big volume behind it. You've got 3.1 million shares already in 11 minutes of trading. I believe this is at all-time highs. It most certainly is. If we take a look, I'll put this on a weekly basis out here. So let's take a look at the weekly chart, and let's take a look at the A to B equals CD up that LinkedIn is forming. Your A point is going to be down at the swing point low of December 2nd, 2011, $55.98. You can use really two A to B equals CD patterns. Let's use the first one out here. That's where it made a swing point high of 120.63 on May 4th. Goes ahead and does a retracement. Looks to me like about a 0.382 retracement. Let's go measure that from that swing point low, from our A point to our B point. Maybe about a 50% retracement out here. The 1-to-1 A to B equals CD. Let's draw the first line across the screen, see if it's over it with the volume. That's what we're going to put, and we're looking at a weekly chart. Why weekly? Well, weekly has more of a more information, more better trend, I should say, better long-term picture than a daily. We can see that LinkedIn on the weekly basis is not up above the B point on volume, at least not that first A to B equals CD. The second A to B equals CD that you can draw out here, and you want to make sure that you have flexibility. You could go from the same A point. Now, the B point we're going to use is a little bit higher high that came in on September 14th, and the retracement coming down into that week of November the 9th out here. Now, if we take a look, and I'll use this one in black, we'll draw across this swing point here. We'll draw this in black out here and see if this week, with the volume that's coming in at this week, it has a chance to get a confirmed weekly A to B equals CD. That A to B equals CD on the second one takes it to 164.35 out there. And the way that it's this week, the action inside it this week, that wide-ranging bar, says it could actually even go higher than that. Volume so far through yesterday was 8.6 million shares. If we come back and take a look at the daily chart so far, 3.5 million shares. So it looks like this is going to have the volume. Now on the daily chart out here, give me a second, you can see it's really in the extreme over bought territory. So, again, part of a momentum indicator out here. But this could, the next buy on LinkedIn would be if it comes back down and it fills the gap. So the breakout area, I think you'd want to go ahead and put this on your work pad, is if this comes back and closes that gap, gets somewhere near the 126.24 level. Again, it's trading at 146.89. It will at some point in time, and if the volume is right, that would be the place to take a look at a trade on LinkedIn. Let's go take a look at commodity markets, the currency markets out there, and see what we have going on. Start with gold. We've got gold trading out at $16.67. Gold just simply cannot get moving. We can see that gold is just still dealing with this downtrend line. The most recent downtrend that I'm drawing is off of the December 12th, 2012 swing point high, and the next area really being the January 17th level. So gold just really another inside day out here, not overbought, not oversold, just in the middle of the road, but struggling from a price standpoint. Silver, we've got silver also running into resistance at that downtrend line. That's coming off of the high of November 30th all the way down. I'm using the January 23rd level out there as the next touch point. You can see that is what is containing any of the upper boundary levels right now of silver. Again, not having much of not really providing us with a whole lot of information, not overbought, not oversold, just simply blah, doing nothing out there. Natural gas, that's a different story. Natural gas here, I had drawn in, we originally were always taking a look at this rising price channel. That is the blue lines out there. And now what we have done is we've switched this over into a declining price channel out here, a descending price channel. That is the red lines. That is what is containing, at least on the upper range and certainly the lower range right now, natural gas. Looks to me, and with the big blizzard that we're going to have of 2013, and please everybody be safe out there. Be a good time to listen to all of the archives at TFNN. You know, we do play 24 hours a day, and if you want some education, just simply go sign up for my newsletter service. You can try that for 30 days, unconditional money back guarantee, and there's about 23 hours worth of education out there in the archives, in the celestial charting area out there. So be safe no matter what, and just simply be safe out there. No driving. Don't go out too early. Don't shovel snow too early, or hire somebody to shovel all that snow that you guys are going to get. If we take a look at light sweet crude, see what crude is doing. Crude being contained now by that 9-period EMA. Seems to be an area of resistance. That's where it's traveled to right now. Light sweet crude wants to pull back even further. If we take a look at where light sweet crude would come back to, well, let's go take a look at retracements, right? We just simply come off of the retracement low. That would be November the 7th. All the way up to the high that was put in on January 30th, 0.382, which it has not made yet, just nothing more than a dead cat bounce. Take you down to the 92.82 level, maybe 89.47. Sweet 618, light sweet crude on its pullback. If we take a look at bonds out here, bonds today moving down just a bit. Bonds having put in good support at that Gartley buy area. That would be the 142.04 level. So bonds trading off of their session highs for sure. They're actually at their session low right now. And what also seems to be keeping this in check here, yesterday tried to break out above that 9-period exponential moving average. This morning here, that seems to have kept it in check out there. And maybe bonds do take a trip all the way back down to the lows again of December 4th out here. But bonds have a nice Gartley buy pattern. Got that beautiful Fibonacci number relationship, 1.272, an expansion. That's of your B to C point, and a 0.618 retracement, in essence, of your X to A point. Your X point being the swing point where it started, which is down at the March lows, March 21st. That's what's going on in the commodity market. Let's go take a look at currencies, see what we have going on in the currency market. Let's start with the U.S. dollar, Japanese yen. Finally starting to pull back here. Right now it's formed a bearish engulfing candle. If we take a look at this currency pair, the last two trading sessions, two dojis out there. So the leaves are falling off of the tree here in the yen. This sets up a pullback in the end of the 87.57 level, perhaps all the way down to 83.58. Now, be really important to watch where the yen closes today. The yen closes today at the price point of basically the open of 2 or 3 trading sessions ago. That is February the 5th out there. That and by open I mean the price point of 92.36. And it doesn't have to be 92.36 exact, but somewhere right around there. It will have set up at the upper range here one of the most bearish reversal signals that are out there. Now, you've got a number of bearish reversal signals, and some have just simply more meaning than others. And I'm going to go show you what I'm referring to when we go back, and we'll take a look at the S&P 500. We'll take a look at the S&P index out here. But this is a candle pattern that and that we have labeled. I have labeled. One of my subscribers or listeners, I can't recall, helped me label it. I'm going to put it up on the screen out here, and it is called the hurricane pattern, named after the Miami Hurricanes out there. Of course, this one here, maybe I'd have to call it the U of M pattern, or the U of N. I don't know. Is there a U of N pattern out there? Somebody got a Nebraska. I don't know. I don't think Nebraska. No, Nebraska doesn't have a reverse signal of this. But we're going to call it the. In fact, we can't call it the hurricane pattern because it's in Japan. We have to call it the typhoon pattern out there. We come back, I'll tell you what it is I'm looking at, but you're getting a very significant reversal signal inside the U.S. dollar Japanese yen currency pair. 877-927-6648. Be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got the Dow up 57 points right now. Composite up 25. S&P up 7. Small caps up 3. You've got Apple up $5 and change. So we're going to go take a look at the hurricane pattern. Of course, in reverse, we'll just simply call it the typhoon pattern out here. Why? Because it's got that shape of the University of Miami logo. Now, I'm going to take you back in time to March of 2009. It's the first time, on the move up off of the March lows. It's back further in the charts if you want to go take a look at it. But it is perhaps one of the most powerful candle patterns out here, reversal signals. Now, at that time, there was also a butterfly pattern that was created inside the S&P 500. That butterfly pattern to the downside looked like this. So you had a 1.272 butterfly pattern that was completing. Again, that was leading indicator. You're able to draw those in advance of any move out there. That's about knowing the road ahead as we opened up. Then you're looking for candle signals. Now, the candle signal here it's a version of what's referred to as a three-river, either evening star or morning star. Morning star when it happens at the bottom. Of course, what you'll see here is you'll see a four-candle version. And that four-candle version, take a look. You get this big down move here on March the 5th. You get this little doji candle, and close enough to a doji, really just trading within that second session out here, and then this large upthrust, this big move off the bottom on March the 10th out here. And obviously that put in, what may be a generational low. We'll see over time if that is, in fact, the case out there. But there is one of your Miami hurricane patterns out here. The next time that it really shows up, it happens to do it over a period of 5 days. This is down here in July of 2009. Look at the down thrust you have. This little wide-ranging bar candle here on July 7th. Then you have three dojis in a row just really kind of hanging out there towards the bottom, and a nice up-thrusting candle. See it closing, at or near the prior session. Take a look at the one back here in March of 2009. There is another hurricane pattern out there. Good hurricane patterns. You can see them coming. That's nice, and then you can you can play accordingly. In this case here, you see another version of it. This one here, you have to didn't get the session on September 4th. Of 2009 didn't completely close into the open of the body on September the 1st, but it was close enough for me. You can see a very similar 4-day or 5-day reversal candle pattern out here, and these have been significant lows in the marketplace, so that is something to be paying attention to, isn't it? If we do take a look at and I can't tell you why it works, I can just tell you if you want to study chart patterns out there, which I think that you do, if we take a look at the lows coming here in June 4th, look at that down thrust that you've got. Also other patterns that are forming out here. We took a look at the retracements, 0.618 retracements earlier in the show. You've got another hurricane pattern coming off of the June lows, and now take us to where we're at right now. You can see that you've got the hurricane pattern, same hurricane pattern that formed here off of the November lows out there. And that is where it helps folks to be taking a look at candlesticks, patterns that are out there, and screw the news. Don't be paying attention to the news. Don't get caught up into the news out there. The news is what is going on inside the chart patterns. What do we have going on inside right now? We've got the 1.272 butterfly. You get a close, I would say, in about the 15-20-ish area today, and that says that the 1.272 butterfly is in jeopardy of failing. If we look at the exact 1.272 butterfly, 1510 was the number. I say if you get it close around 1520, that has failed. What would that set up? That sets up the next level up, and that would be 1555 in the marketplace. Folks, stay tuned. We've got the Nadex Bull Bear binary option hour. I'll have Tom, myself, and Daryl. After that, we go out to Basil Chapman. Then it's to, Basil? Yeah, Basil Chapman, Nico DeHaan, the entire crew today. Daryl Martin Show, David White, Ken Shreve, and Tom O'Brien. Thanks so much for being here, folks. Have a terrific weekend if you're off to start your day. Be safe out there if you're in blizzard territory. Take care, folks.